Today's October 8th, and it is getting to the point now. It's we're deep into the fall weather, and now that I'm moving towards more and more into the reality of day trading, and it has occurred to me that these stocks. Um have a certain way of moving based on certain criterias, but they are repeatable. And I remember one of these guys, and Tim Sykes says that this pattern repeats all the time, and that seems to be true. And here's the one example: when a bad news hits and market opens, before market opens, it starts at a certain level, and then it drops, and then it may creep up a little bit um, based on the profit taking. And then when the market opens, it is possible to continue its profit taking, or it may just reverse, and it may be a market overreaction. The individuals who are participating in the future may be incorrect. The probability of that is less. And so what it will do, as soon as it opens, it'll stagnate a little bit as people take profit, and then it'll start to continue on its drop. And as it does, normally on an expansive, wide window of time frame, it takes a while for the stock to be re-entered into more favorable territory where the individuals who the market exited, and then there will be a time where the stock becomes preferable, and the stock will usually dip and then recover at a certain point to recover. There's also a bounce that occurs, and it moves in that direction. Or it could be that the market conditions are improving such that and also the information is more accurate, and as that occurs, a day or 2 or 3 days down the road, the stock may slowly start to recover. So the general movement of the stock is in that manner. However, if the stock is moving in a pattern like that, it's indecided, but it is in a window of a trading range, then it can behave that way. When a stock moves that way, all I do is flip it around and look at the three particular movements of the stock, and it generally moves in that direction, and either sideways or move in that direction where it spikes up and continues up, or it moves in a range where it latches up to a certain level and moves sideways as it establishes a within a certain time frame. It reaches a certain plateau where it resides in that price range. So the stock movements are primarily just three different types of stock movements. Either it latches on to a different level, whereupon in between where it moves, there will be movements. It attempts to recover, or when it's moving down, it attempts to recover, and that buying spree ends, and then further decline occurs. And that is a textbook, and varying to a varying degree, that is the behavior of the stocks. And that essentially occurred on a Friday, yesterday, when the stock market was experiencing a job data number and semiconductor sell-off because of news from AMD. And what that happened was that the stock would dip, and then there would be momentarily recovery. That is exactly what happened to the trade that I made. One of them was Microsoft, and I've noticed that what it did was, before the market opened, it had a steep decline, and it settled on a price range somewhere in the middle of the road. And then when it did that, it recovered a little bit, and then it continued on its down trajectory, where it ended the day on a severe loss, with the Dow and the Nasdaq experiencing a heavy loss. And the pattern and the behavior of how the stock market moves is essentially have been the same. And with trading bots and the new entrance of automated trading, with individuals who now have the ability to employ software in order to employ their own version of how they trade, there may be certain time lags between one individual to another individual as the variances there, and nobody uses the same signal at the same point to make a abrupt change in the price of the stock, because when a group of individuals who are doing the same thing, attempting to make the same trade, there could be there could be less time that's used to either enter or an exit trade, which means that there could be a 90-degree drop and then a flat line at that point. And essentially what that means is market is becoming incredibly efficient. And it would be very difficult if it moves vertically and moves sideways. So essentially the only individuals who would make money are the swing traders, because it happens over a night. And anything can happen overnight. And therefore, the idea is to figure out what the pattern is, what the most commonly accepted pattern is, and understand how the stock moves, and then based on the news and the severity of the moves, what is the best opportunity to take advantage of that trade. So the idea is to picture in my mind the behavior, the movement of the stock based on the stimulus. It's essentially, that's what it is.